नमस्कार आप देख रहे हैं बिजनेस टुडे एंड दिस इज मार्केट्स टुडे where we discuss everything about stock markets and help you understand what kind of a trading action have you seen throughout the trading day. We have seen that the stock markets slipped into the red in the second half of trading session, even though we had started on a positive note following the positive global cues that we were seeing from US and Asia, but we failed to hold on to that green, and the benchmark Sensex and the Nifty, they slipped into the red and closed in the negative territory, also taking with itself the Nifty Bank and also the mid caps that slipped also into the red in today's trading session. Most of the sectors also fell into the red territory towards the closing of the session, barring just about two or three odd sectors like IT and metals that managed to stay afloat in this otherwise very, very choppy session that we have seen all across. Of course, most of the cues are coming in from Ukraine and Russia. There's still high hopes on the talks that are likely to happen again today. That they may result in some kind of a solution coming forward, despite this 8 day continuous war that has been going on. We are hopeful that some solution emerges and there is de-escalation and more dialogue to end this catastrophic war, which we have seen the impact on not just humanity but also the economy at large. For Russia, there have been very stringent Western international sanctions. People are at the receiving end of those international sanctions in Russia as well. And most of the economists are now looking at what could this mean for the economy at Russia and also the related economies, because none of the economies in today's world are actually isolated, and there is a linkage everywhere. So a ripple impact may be seen all across wherever there are supply chains, there are trade chains happening. So, all to minimize all of that impact, one is definitely hopeful that there is some kind of a de-escalation. The stock markets are just reacting to everyday news and every hour news flow at this point in time. No clear direction really emerging as of now. Experts really talking about how traders need to be very, very cautious. The markets are unable to break beyond a certain range at this point in time. On sudden need negative news flow, we see a downward knee jerk reaction. Investors are sitting there, bulls are sitting there to capture those dips, and again we see an up move, but the markets are neither able to break away above the certain zone and are not even falling below a certain support level as well. So they are stuck in a broad range at this point in time. As far as today's trading session is concerned, we do know that the Sensex and the Nifty both finished the choppy session on a lower note, as gains in IT and oil and gas were offset by the losses in financials and auto stocks. Globally, geopolitical uncertainty continued to keep investors nervous. 1 week into Russia's invasion into Ukraine as well, both the headline indices finished about 0.7% into the red as well. The Sensex fell 366 points or 0.66% lower to end the day at 55,102. The Nifty index also fell by over 100 points to settle below 16,500. It gave up the 16,500 mark towards the end of the session. About 1,963 shares advanced, 1,279 shares declined, 116 shares remained unchanged at close. There were a whole host of stocks that were seeing sharp downticks today. Ultratech Cement, Asian Paints, HDFC Life, Shree Cement, Aisha Motors. These were the top Nifty losers. Remember, most of these sectors depend on crude oil as its raw material. So these sectors are definitely feeling the heat of crude oil prices surging over $118 a barrel also in today. And that has been a very, very concerning factor for a country like ours. We import oil for most of our needs. Now, reports are floating around whether very, very soon OMCs will suddenly raise the prices of even petrol and diesel to combat the impact of sudden rise in these crude oil prices. Remember, back in November, on specifically November 4 was the day when we stopped seeing after that a daily revision on the upward side or downward side on both petrol and diesel. They have remained unchanged since over 100 days. And in this span of time, the crude oil prices have actually jumped from $80 to near $120 a barrel now. And what is going to be definitely at the receiving end is the related sectors, cement sector or the paint sector, which use crude oil as their raw material, and their margins will definitely be hit. There are reports coming in from some of the paint majors that they are going to soon hike the prices of paints by 4 to 5 odd percent as well. So some of those reports are definitely key. Cement stocks, especially, were down by almost 8 odd percent in today's trading session as well. On the other hand, gainers included the likes of ONGC, UPL on the back of stake sale of subsidiaries, Power Grid Corporation, Wipro, Tech Mahindra. So, some of the IT majors giving some kind of a safe haven move to investors today. Among sectors, autos, capital goods, banks fell by 1 to 2% or even more. FMCG and realty were down by 0.5%. Metals, IT, and oil and gas, power indices still managed to stay afloat. Mid caps shed 0.6% or towards the end of the session. The small cap index rose by 0.35%. The shares of Asian paints, in fact, are near the bear market. Now, Asian paints was seen trading below all key daily moving averages for the first time since the start of the pandemic, weighed down by the margin pressure amid the rising costs due to crude oil price gains. So, keeping in mind all of that as well. Most of all, experts do believe that investors need to be still on a wait and watch mode. Do see wherever the opportunities are arising for investors to go for long term positive bets. But for traders, it's still better to just stay away from this daily up and down movement and wait and watch till the time more clarity emerges and the Nifty manages to take one certain direction after the clarity emerges, so that it can be a better deal for all the traders at this point in time. We'll keep you posted with everything that's developing in the world of stock markets and business, so that you can keep track of your investments and how they may get impacted with these changing macros at this point in time and the geopolitical tensions. So do stay tuned with us onto Business Today, and don't forget to subscribe to our YouTube channel as well.